Welcome to Alongside Us, a Haverkamp View on the market. I'm Jessica Mortweet, Chief Marketing Officer here at Haverkamp Group, and your host for today. We created this show as a way to connect directly with you, our investors, by sharing insights into our performance, discussing the current landscape, and providing perspective on where we're headed as a company. Joining me here today is Brent Haverkamp, our founder and owner. Brent, thank you for joining us today. To start, let's talk about the broader picture. Real estate is becoming an increasingly preferred asset class, especially in the Midwest. Why is that, and do you think that'll continue to be true?
I think perspective is really interesting, Jessica. Yesterday, Paul and I spent the entire day with an investment group from the West Coast, and it was really fun to see their perspective. In their view, Midwestern real estate is cheap. And he said over and over again, Midwestern real estate cash flows. Midwestern real estate is stable. And so some of the things that really I think we take for granted here in the Midwest because it's all we've ever known, when you see it through somebody else's eyes, you really begin to see how powerful it is. And, we've invested in Midwestern real estate for now 30 years, and we take for granted some of the things like stability, strong cash flows, slow growth, and those types of things I think really make Midwestern real estate powerful. And more than that, I think that we're seeing increased popularity, and the group that we spent the day with yesterday, I really think is just a microcosm of what we're going to see in the future. And I think more and more people are going to see the value of Midwestern real estate. I think we're going to continue to see capital inflows into this market. And I really think it'll help cement and help the growth of the real estate that we've invested in for so long.
Talk to us about risk assessment and how that has changed in recent years in regards to deals Haverkamp Group puts together.
Yeah, I think there's two things. I think the market has changed, and I think Haverkamp's perspective on risk has changed over the years. And historically, if I go back 15 years and maybe 10 years, and interest rates were lower than they are now, and I think a lot of our focus was how little equity we could put in deals. And lots of times we would only put 20 or 25% equity into a deal. Today, it's a really different perspective. With higher interest rates, we really value safety and security for our investors. And oftentimes we're putting in 40% or perhaps even more down payments into our projects. And really, I think we value the security of return of capital at least as much as we value these high returns. And so we are really working to create stable investments that have less risk in them.
Brent, what are you seeing in regards to new development costs?
Yeah, really, I think COVID really opened our eyes, and we had so many supply chain difficulties, and really during that time period, we had such an increase in costs. Probably, some of the first times that we went over budget on a lot of our development projects. And so we really saw a step change, I think, during COVID. Today, that's starting to lessen. And we've actually started to see subs call us looking for work. I think we're seeing that development cycle slow. Just some interesting barometers on the market. Lumber futures have gone down quite a bit. And so we're optimistic for development costs in the future, and we really hope that they're going to moderate and really make development projects more feasible in the future.
Absolutely. In the investing world, having a proven track record is a big deal. How do you see that creating value for our investors, and where does Haverkamp Group fit into that story?
Yeah, I think we're surprised at how many new entrants there are into the investing space into real estate. And we're seeing a lot of groups without a lot of track records into this space. And, as we look back over the 30 years, I think, we started out talking about perspective, and I really think it gives us a perspective. And we've been investing in high interest rate environments, into low interest rate environments, into good liquidity, poor liquidity, the Great Recession of 2008, and it just helps to give us a long-term perspective. And I really think that allows us to not really pay attention to the flavor of the day, but really look at, okay, what's going to hold value for the long term? What's going to be meaningful through different types of cycles? And I really think the team that we've built, the longevity that we've built, just gives us a better perspective into the market. And I really think that's what a lot of people are looking for, and they want that safety and security of knowing that their capital is going to be in strong hands.
There seems to be a growing trend of individuals diversifying out of the stock market and into real estate. Why is this becoming increasingly popular, and do you believe this trend will continue?
Yeah, in talking to a lot of our investment advisors, I think there's perhaps a bit of disillusionment, perhaps, or uncertainty as they talk about the stock market. And I think the concentration that we see, I think just a few stocks make up a really high percentage of the S&P 500, and there's a lot of excitement between artificial intelligence and the stocks that push that. But I think it just creates a lot of uncertainty, and a lot of people believe that the valuations are pretty high in the stock market and the volatility is pretty high. And I think it goes back to, the first question that we talked about, this Midwestern real estate, and it's the stability and it's the lower volatility with good returns that I think that people are looking for. And a lot of people are looking for a hedge as well. And if they have a majority of their assets in the stock market, that creates a lot of uncertainty for them. And I think the diversity that we can create with our investments is really attractive to a lot of people.
You've also talked about there's huge benefits when we're talking about taxes. And so talk about the tax benefits of real estate investing.
Yeah. First of all, I think I need to say that I'm not a tax advisor, and this isn't tax advice, but really I think this relates to my personal experience. And, we have found that real estate investing is so tax efficient and so tax incentivized. And I'll just give you oftentimes an example that we see in a lot of our with a lot of our investors. And so if they go into a new project, the depreciation for that project will offset all of their income for the first multiple years, 5, 6, 7 years of that project. So even though they're receiving dividends every year, they pay no taxes on that. And then oftentimes 5 or 10 years into the project, we'll do a refinance. That refinance will often return all or even more than all of an investor's capital, and that money has no tax implications. So that's we don't have to pay any taxes on the refinance proceeds. And then finally, there's the 1031 exchanges that a lot of people are interested in accomplishing, and that allows us to go in and out of real estate investments oftentimes without paying taxes as well. And so there's so many tax efficiencies that when you compare stock market returns to real estate returns, it discounts the really powerful incentives that real estate gives us from an income tax perspective.
Mm-hmm. That's great. One of the values Haverkamp Group has in regards to investing in real estate is the long-term ownership strategy.
Yeah.
So why does Haverkamp Group focus on that long-term ownership?
Yeah. We have always approached real estate as an owner. I think we talked earlier about a lot of groups are getting into this market, and they try to make what I would call the quick hit, and they want to buy it right and sell it right. In the real estate business, they'll call it, they want to get up and down in a short period of time, and they try to time that market to hit the returns. And we believe that the value in real estate is in the long-term ownership and operations. And so to that effect, we manage everything that we own here internally at Haverkamp, and everything. And so that really allows us to operate the property as an owner would. And so we are not as concerned about hitting the times of the market. We want to enable us to have long-term ownership of that property.
So how does that set us apart from other real estate companies?
Yeah, I think, as we talked about before, if you have a short-term mindset, you have to be able to time that market well. But as long-term owners, we really have a perspective of incrementally increasing that value of the property every year. We do that through really efficient management and asset management, and that allows us really to not be as concerned about the volatility in the real estate market and the interest rate cycles, but it allows us to effectively manage that asset over its life cycle.
Okay. So let's move on now. Let's talk about some recent successes and highlights. Now, while we have a long-term ownership strategy, you have recently sold a few projects.
Yeah. Probably the one that I'm most excited about is our Clinton project. And, as we talked about before, we're often long-term owners. And so often we're going to own a property for 10 or 15 years. And so it doesn't allow us to calculate returns as easily for people. But there was a property, roughly a 200-unit townhome property in Clinton, Iowa. And it was a little bit outside of our normal investing geographies. But we owned that property for 5 years. And so our investors put $3.5 million into the project. And after 4 years, they got 100% of their investment back through distributions. And then about a year ago, we decided to sell that property. We just felt, for a variety of reasons, that this was the right time to sell that property. And we received, I believe, 20 written offers on the property, and we did really well. And so the $3.5 million that our investors originally invested, we returned $14 million over the 5-year period. And so real estate investors would call that a 4 MOIC, so multiples of invested capital. And that equates to a 44% internal rate of return. Now, I'd love to say that we were able to hit those numbers on all of our investments, and we aren't. But I really think what's indicative of that investment is we were happy with that investment, but we didn't believe that it was going to be a home run for us when we did it. I believe we originally pro-formed that property somewhere in the mid-teens and for an internal rate of return. And really the appreciation is just what really surprised us, and it allowed us to take that mid-teens return into a 44% internal rate of return. And so needless to say, our investors were really pleased with that return. And I think it just goes to show how disciplined we are with the underwriting that we do on properties. And when we put out a number, it's because we believe that that's kind of our middle of the road number. A lot of groups will put out an optimistic number, and I tend to not want to do that. And so I think that's probably the best example, Jessica, of the recent investments that we've done.
Mm-hmm. That's great. Haverkamp Group has a history of successfully beating estimated construction costs.
Yeah.
Why is that? And do you believe that that will continue with future developments?
There's a couple notable exceptions to that. And, a couple that have bid us. And so I remember during COVID, we had a fixed price contract with our investors, and we saw prices in some cases move up 20%. In some cases there would be one part, perhaps electrical part, that the supply chain really broke down on and prevented us from opening the project. And so we went over budget on a couple of projects that we had to eat those costs during the COVID period. But now on both of the projects that we're constructing, we're under budget. And so we're really pleased that we seem to now be in control of the costs and our supply chains once again. And we're really hopeful that will really allow us to underwrite and to estimate these projects, better in the future as we move along.
Now we move on to a little bit about financing. I understand that 2026 is going to be a big year for refinancing at Haverkamp Properties. Many loans are maturing. How are you thinking about that and preparing for the future?
Yeah, we have roughly $100 million of loans that are going to mature in 2026. And so one of the things that we have a lot of interest in is interest rates. And I think it's really instructive for our investors to kind of see all of these projects. We have put 7 or 10-year debt on. And so over this 7 to 10-year period, the property has appreciated, we've paid down debt, and on each one of these, we expect a cash out refinance. Some of them will be very significant in the 8 figures range. And so what's really interesting to understand is that cash out refinance has no income tax implication for it. And so all of those refinance proceeds come back to our investors without any income tax implication. And so really, these loan maturings are really a liquidity event for our investors. And many of them are looking pretty forward to 2026 because it'll be a strong liquidity year for us.
Let's talk about some ongoing building projects and funds. First of all, how is Emory North Liberty doing?
Yeah, we are really excited about Emory North Liberty. It's a large project for us, probably a $75 million project. And we started it during a challenging development time. And so we underwrote that property very carefully. And the fun thing is we've accomplished 3 things. Number 1, we've completed phase 1 under budget. Number 2, we were able to hit our velocity on rents. We have roughly 150 units on phase 1, and those units we were able to rent up on time. Number 3, we were able to hit our pro forma rents. And so on Emory North Liberty, we were able to do exactly what we set out to do with that project and hit all of our numbers really in beating budget in a challenging environment. So we've decided to move ahead with phase 2 and all 5 buildings of phase 2. It's a 200 unit project. We have financed at a pretty compelling rate for this environment, and each one has activity on. And so starting early next year, every few months, we're going to bring a building online. And so we're excited to see if we can accomplish the same thing with Phase 2 at Emory North Liberty as we did with Phase 1.
Let's talk about Ativo Trail. We have two of those properties. How are those performing?
Yeah. So, probably the development projects that we're doing that I'm most excited about are the Ativos. And for those of our investors that don't know what we're talking about with Ativos, is we are building a luxury active adult project. And so these are plus 55 housing, luxury for rent housing for seniors that are really interested in making a lifestyle choice. And they're highly programmatic in that we have a tremendous amount of activities for our residents. There's a tremendous amount of interaction and socialization between our residents in a luxury real estate environment. And again, just yesterday, Paul and I spent almost all day at our Ativo projects, and by far they are our favorite project to go to. And people greet us. People want to talk to us about the project, and it's fun seeing people interacting, from sitting around the fire pit to doing aerobics in the pool to playing cards in our lounge to a group of ladies were playing dominoes yesterday. And it's so fun for us to see that we are able to increase the quality of life for that demographic. And so I believe that that type of housing will become more and more popular as time goes on. And particularly here in the upper Midwest, that demographic is one that's growing. And we all know that the largest demographic are the baby boomers who are into retirement age now. And we believe that that type of demographic will really increase. And so we have two Ativo projects, and Ativo Waukee has been done now for 2 to 3 years. And what's really fun about it is it seems like the word of mouth organically we're able to keep that project full. And so we give the residents such a good experience. They tell their friends, and that project stays full. And so we decided to build another project like that in Ankeny. And so we have Ativo Ankeny. Phase 1 is nearing stabilization. We're nearly 90% leased on Phase 1. Phase 2 will come online beginning end of this year, beginning of next year. And we've just opened that up for leasing, and we've rented, I believe, a half dozen units there in the last couple of weeks. And then Phase 3 will come online approximately a year from now. And so, it's really interesting. The people that move there, it's a lifestyle choice for them, and many of them have to sell a home to move in. And so the projects are slow to stabilize. They're slow to fill up. But once they fill up, I'm really happy with the experience that we provide. And, another interesting thing about that is our residents stay for a long time. And we believe that our average length of stay may be as long as 5 or 6 years, which is multitudes of our other housing types. And really, for a real estate investor, that gives you a very stable tenant base. And so we're excited about our Ativo projects.
Yeah, they're really beautiful projects and changing lives. So a win-win all around. We have a lot of investors in our acquisition fund. How is that performing, and what is the focus right now?
I think the acquisition fund was the biggest surprise to me over the last couple of years. And our premise was that as interest rates rose, real estate values would decrease, and that they would become soft, and we would be able to find good deals in the marketplace. And what we found is as interest rate rose, that investors, predominantly from the coast, accepted lower returns for the real estate. And, like I talked about our Clinton project, we received perhaps 20 written offers, and they were from all over the country. And the reason that they liked it is because it provided that cash flow that we talked about. And so there is a ton of capital chasing Midwestern real estate projects right now. And so we looked at hundreds of projects. We made written offers on dozens of projects, and I'm really pleased with the projects that we ended up with. We had bought the core, and then we had an existing investor in our Cedar Rapids portfolio that needed to liquidate, and we feel like we got a good price on that portfolio. And so I'm really pleased with what we ended up with, but it was a challenge for us to get there, Jessica, and to really hit the returns that we wanted to hit. And I think what's really interesting for our acquisition investors to know is the amortizations on the loans are relatively short. And so what that means is we're paying off a lot of principal. And so the investments are good, but they may not be receiving the cash flow that they expected. And so if you go back to our earlier conversations, when those loans mature, I think with the cash out refinance proceeds, those investors are going to be pretty happy. And so for our acquisition fund investors, my advice is be patient, trust the process, and I think you're going to be pleased with it.
As we've invited more investors to come alongside us here at Haverkamp Group, we've also invested in expanding our asset management team. What does asset management do, and how will that allow Haverkamp Group to better serve our investors?
Yeah, I think most people have an inherent understanding of property management, and they visualize a company working with tenants, leasing apartments, and having that property management team be the main source of contact with our tenants. And I think the best way to think of asset management is our representatives that best relate to our investors and the owners and their concerns. And asset management will deal with things like budgets and capital projects and refinances and insurance and some investor communication. And really what this group does is it allows us to zoom out from the day-to-day property management and focus on the long-term management of the process. And we've just hired a couple of great guys that we really think will push our asset management forward. And we're really excited to think that we have the ability to really put a fine line to how we want to manage our property in the macro sense moving forward.
In the last year, we opened a securities brokerage, Haverkamp Investments. How does this fit into the long-term success of both Haverkamp Group and our investors?
Yeah, really, I think our goal was to serve our investors. And the nice thing about having a brokerage is it makes sure that we follow the process. There's a lot of groups, real estate groups, that raise money without a brokerage. But what it does is it gives us some oversight. And it also requires us to make sure the investments are suitable for our investors. And so we really like that additional compliance and additional oversight to really give our investors the confidence that this investment is right, accurate, and good for them.
You know, it's officially fall, and that means it's tailgating season. We're getting ready to have our second annual investor tailgate here in October.
And Jessica, when is that tailgate?
October 25th.
October 25th. Okay. And is that on a football Saturday?
It's a football Saturday, so that
Do you know who we're playing?
TCU?
BYU.
BYU.
Yeah.
See, now you're quizzing me. Yeah. Yeah. So talk about why we had that event planned and the goal for that.
Yeah. So we did our first investor tailgate last year, and I was really surprised. I think we had close to 100 people in our offices, and it was a lot of fun. We did it prior to a football game last year, and we decided to do the same thing on October 25 this year. And really, we're hoping for a couple hundred people to come in our offices. And really, the goal is, number one, to have a good time. Number two, to meet each other. Number three, if they'd like to interact with me or any of our staff or any of our investment staff, that would be a great opportunity to do that. And number four, we just really wanted to express gratitude. We did prizes and food and all sorts of fun stuff last year, and just say thank you for being an investor in what we're doing here at Haverkamp.
Yeah, last year was definitely a lot of fun.
Yeah.
I saw a lot of fun going on. Finally, let's talk about the outlook for the future. What does Haverkamp Group's future look like over the next 6 months to a year?
Yeah, there are a lot of things that we are excited about. Probably the first thing that's foremost on our agenda is working on completing our construction projects. So we talked a little bit about Emory North Liberty and Ativo Ankeny. Both of those projects are well underway from a construction perspective, and we hope to complete both of those projects in 2026. And so we're excited about that. Also, we're starting some new development projects. Probably the primary one is we're working on starting a new Ativo in Omaha, Nebraska. And we're excited about that for a few reasons. It'll be the first project that we've done out of state. And also, Ativo Omaha will be the largest project that we've ever done. It's a $90 million plus project, and we're really excited about starting that project. Our Ativos in Des Moines have been so successful. We're really interested in starting one of those in Omaha, Nebraska. Also, we're working really hard on starting a new Central Iowa conventional multifamily property. We have one piece of property currently under contract, and we're looking at perhaps putting a second one under contract. And so from the development standpoint, we have a lot of things going on. I think probably what's also interesting is I'm expecting that there'll be more opportunities on the acquisition side in the future. And as I said, we've probably looked at several hundred projects over the last couple of years. We're going to continue to look into that market, and we would love to find a great acquisition project or two, either 2025 or 2026. That would be exciting to us. We're committed to growing here at Haverkamp as a company, and I don't think anything's going to change on that in the future.
You know, we also have a farms division.
Yeah.
So let's talk about Haverkamp Farms, and when will investors be able to invest in farmland?
Yeah. So I don't think a lot of our investors know this. And so let's talk about farms just for a few minutes. And so way back in 2016, as Paul and I were looking at our portfolio, we said, wouldn't it be interesting to invest in farmland? And although multifamily real estate is predominantly a cash flow investment with some appreciation, farm real estate is predominantly a appreciation real estate with some cash flow. And we said the inputs of that business are totally different. And we started investing in farmland way back around 8 or 9 years ago. And since then, we've bought 60, 70 farms somewhere. And we've really made our acquisition process a sophisticated model, a sophisticated process, and we've learned a ton over the last 8 or 9 years both on the farmland acquisition process and on the ag land operation model. And so a goal for us in 2026 would be to allow our investors to invest into farmland alongside of us in the same way that we've done on multifamily real estate. And I don't think 4 or 5 years ago we would have felt ready to do this, because I think we were still learning that model. And we don't want to release anything to our investors that I haven't proven for myself. And I think now we have the confidence as a company that we have a proven return. There's been several years that we've had greater returns on farmland than we have on our multifamily portfolio, which is really interesting for us. So we're going to work, and so let this just be a teaser. We're going to work to allow our investors to invest in farmland in 2026.
We get questions about 1031 exchanges. You did talk about that, but talk about what that is and why we're adding this to the capability in the future.
Yeah. One of the most powerful real estate incentives in the tax code is a 1031 exchange. And what that allows someone to do, if they have a piece of investment real estate that they've held for some time, they can sell that real estate, and instead of paying taxes on the gains of their investment, they can roll or exchange that investment into another piece of real estate. And today, we don't have the capability to allow those investors to invest into our funds. But because we started a securities brokerage, we believe, or a goal of ours is to allow 1031 exchanges into our investments. And so that's something we're going to be working on as well in 2026, is the ability to allow 1031 investors to invest in our funds.
Overall, what's your future outlook for 2026?
Yeah. There's several ways for me to look at that question. From a company, in terms of our capacity, I am super optimistic. There's, I think, a lot of clouds on the horizon, and I think it remains to be seen how cloudy or sunny 2026 will be. I really, as I look at the interest rate outlook, if interest rates continue to go down as we've seen them go down the last month or so, that would provide a tremendous tailwind to our real estate investments, and we would be really excited about that. Also, as we've talked about before, if our development costs continue to moderate, that would really give us a lot of tailwinds behind our development projects, and we would be excited about that too. And so I think there's a couple of things that if it moved our way in the future, I really think our real estate investors would be really pleased with the upcoming environment.
Well, Brent, thank you so much for sharing your insights today. To our investors, we're proud to have you investing alongside us. We hope to see you at the Investor Tailgate at the end of October. And thanks again, and we'll see you on the next edition of Alongside Us, a Haverkamp View on the Market.